The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 11th Trader's Edge show. Kind of still, I'm in good shape. The throat is pretty much healed. Slight cough if I overdo it, so I'm not going to overdo it. It's just as simple as that. Look, I want you to know a couple things. One, I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So what that means is you pick up that phone, you dial on in at 877-927-6648, whatever it is that you want to take a look at, and I'll give you my eyes on your chart, your symbol, whatever it might be. Do the best that we can out there, so you'll be able to at least identify support and resistance, and more likely where that symbol, that index, that equity, that futures contract, that currency pair, whatever it might be, where it is headed to. Of course, if you can't give us a call, you can always send me an email, steve@tfnn.com. Inside the subject heading, just put radio show question, and in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. We've got the Dow up 105 points, S&P's up 33. That's 1.25%. The Nasdaq 100 and the semis are the leaders out there, up 1.8% and 2.6%, respectively. So good day there. The transports are up 1.5%. Remember, we looked at the transports on Friday and on Thursday, and it noticed that it was forming a Tommy DeMark setup 9 count out there. So that could be a bottom. So we'll take a look at that. Leading the charge, the upside, you got Amazon, Mercado Libre, Google, Line Technologies, and NVIDIA. So they're up nicely. Those are up $10, $11 to $32 out there. Boeing is the, as you know already, if you've been listening to the shows at TFNN, I'm pretty sure that it's been talked about. But Boeing is down $28. However, if we take a look at the Boeing stock, I just posted this in the den out here. You know how you and I, we talk about gaps, how they're either our friend or our foe out here. And all these other colored lines are just some simple trend lines out there to populate a stock chart. But in the case of Boeing, on the trading session, the day of January 30th. I don't know if it was an earnings release or what it might have been, but there was nice gap to the upside. There was volume behind that move. It was accelerated volume. So even though the candle itself was a doji candle, still qualifies as wide price spread and most certainly accelerated volume. Remember, these gaps, the reason why they are our friends, either to the upside or to the downside, is because they can act as support or resistance. So when we take a look at Boeing open today, the price point that it opened at was 371.27. Got down to a low of 365, but at 367.78 to be exactly, that's where that gap began. That gap held. That's a really important thing to know. So now you know where really strong support is. Forget about profiles, trend lines, or anything else that might be out there, but 367, good volume behind the move today, 25 million. One could say, hey, that's pushing to the downside. Yeah. We could also say that that pushing to the downside was right into support, and that has held support out here. So with regard to gaps being the friends out here, I would say that Boeing should continue up to the gap that it's created today. Now that, and when you close above or below a gap, depending on if it's a gap to the upside or downside out there, you know, it would have its meaning. So where's resistance in Boeing right now? We would say 415.50. Of course, knowing that the daily 415, that's what we would say, no matter what. So if Boeing is able to overtake that, not referring to overtaking it today, but if it is able to overtake that, again, gaps are your friends. You will then learn that a resistance point really wasn't resistance. P.S. Day resistance. So that's what's going on inside of Boeing. Also moving to the downside, Booking Holdings off 7%, Domino's Pizza down 4%, and Spirit Airlines down to about 4 buckaroonies. So the question is, or question should be, Steve-O, what are these markets doing? out here. Well, let's go take a look. Let's start off by taking a look at our market profiles out here. And Jay inside the Tigers Den is going to enjoy this because we now have two new market profiles that have formed. Weren't there earlier this morning, but have formed during the last couple of hours. Now, when they begin to form, I'm using an advanced tool to signal the potential of a set of new profiles out here. I really won't know. You won't know till tomorrow, till today's action is done out here. But in the case of the ES Mini specifically, the new profile, the bottom's at 2736. It's not a low that's been touched out here. The high is 2795, and the center of the box is 2786. We're trading at 2781 right now. So we're very close to what could be a resistance. Now, this profile, this new profile, is bearish in structure. Let's do this here just to make it easier for you to follow along, I suppose. Let's do this. Let's go ahead and turn off price. Give me a moment to do that, and then you'll be able to see this. You'll see this new well, man, it's hard to do that too. Let's turn off the weeklies. Give me a moment to do that. There we go. Now we're just looking at the blue lines out here. If I know it's just a speck, I'll widen out, but it's an important spec. And the spec I'm referring to, you can now see, or you should be able to see, and let me just go ahead and use a yellow rectangular box so you know exactly that this is really what we're looking at out here. And you see the bottom, 2736. So the sellers, if they do exist, and they do exist, the question is whether buyers can overcome this area. This area specifically is 2786 to 2795. So we have a bearish structured box. This is where all the sellers should be lined up. And so if this is nothing more than just some type of counter trend rally in the market, this is where price ought to stop. Not right this second, I'm saying, although it could be. But that's not what I'm saying. I'm saying watch the 2795. Now, because it's a bearish structured box, as was the prior box, remember, this is just potential box out here. This doesn't have to solidify today, but right now it's out here, so we have to go with the data that we have. If the ES Mini closes above 2795 out there, then your last level of resistance is going to be that high out here from March the 4th. That was at the 2825 area. If I put the the weekly profiles back on the chart out here, they've got that 2825 level. So if price is able to clear 2796, then you're looking at 2825 before you see some potential resistance. That's what the ES Mini is doing. The other indice or futures contract to form a new profile is in the Russell 2000. So the Dow no, and the NQ no. We'll take a look at the NQ because it's also at an important inflection point. And if we take a look at the new inflection points, if you will, inside the Russell 2000, you're only going to see two blue lines. That's right, just two. You're not getting gypped or anything. It's just that 1526 is really, or should be, strong support because the center of this new box and the bottom of this new box are right there. Then so there should be all kinds of buyers ready to defend that area. The cool thing about that is if sellers can overtake that area, well, then you know price is going to head to at least 1505. Not the big deal, but below that, it would be look out below. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Now, I think what you should anticipate is that the markets are going to continue to move higher, albeit with this caveat to it, and that's in taking a look at the NQ daily time frame. So we've already looked at the Russell 2000, the ES. We've got some new support and resistance levels to be watching. And we've talked about the bullish or bearish structured profiles. In the case of the NQ, its a daily profile is a bearish one in structure. Again, if I turn off price, it's a little bit easier for you to see. So we'll do that. And you can see how the center line at 71.29 much closer to 71.62. Now, as we speak right now, price is above 71.62, not by a lot, 71.92. 30 points seems like a lot, but you know, in a heartbeat, it can give that up. If the NQ closes over 71.90, 71.62 today, you should see a run up to the top of its weekly profile, which is 72.41. That was a profile that formed on the trading day of March the 4th, and that was tested, that was rejected. It was resistance out there. So if the NQ can go ahead and drag everything to the upside, and the NQ formed a nice little hammer candle on Friday, as did each of the equity futures contracts out there. What you should see is at least a run for 72.41, and not to say that that's where it has to stop, but that's where we'll be. You know, we'll be watching the NQ out here, and in watching the NQ, you know, we should take a look at Apple. So if we take a look at Apple out here, you're going to see that it is taking out a prior swing point with volume today. Now, what I'm referring to out here is just simply the swing point from March the 4th, which had 27 million. We're only at 18 right now. I find it hard to believe that by 4 p.m. we won't be above 27 million shares out there. Now, where Apple is headed to, when we took a look at Boeing, we were taking a look at the gap, how the gap held as support this morning as price had moved down based upon the incident over in Ethiopia. Where Apple may struggle is at its gap to the upside. Now, the gap to the upside, well, it really was a gap to the downside is really what I should say, and that was on the trading session on November 20th. Good volume behind that move to the downside, 67 million shares. So what you're going to want to watch, what we're going to want to watch, what everybody's going to want to watch, and where Apple is headed to is 184.99. It's above its daily profiles. It's taking out a prior high with volume out there. So the question is, where's resistance? Resistance inside of Apple 184.99. If it clears that, well, then it's on the higher pastures. Those higher pastures likely 202 and a quarter. And yes, you can quote me on that. Now, John wrote in. John in Sarasota. He wanted to take a look at, I believe it was Ubiquity Networks. UBNT is the ticker symbol out here. So as we go take a look at that, and his question is very specific. It is, or it was, what is this going to do over the next 6 months? What? I love you. All right. During the next 6 months. Yeah, he's just throwing out the gauntlet, throwing out a challenge out here. Look, here's what we know about Ubiquity Networks. Number one, on Friday, as price had pulled back and was moving lower with inside its bearish structured box, meaning that once price gets underneath that point of control, which was 146.20, sellers should have the energy to drive the ball downfield to the goal line, and the goal line was 137.54. That was the bottom of the profile. Held as support. Now it's moving up, and it's a bearish structured box, John. So are we in a trading range out here between 137 and 149, 148? We may be. But if price is able to close above 148.68, and now specifically I'd go to the weekly chart, and we would change that just slightly, because the last time a bearish reversal candle formed was last week, a little bearish engulfing candle. That says the high of last week is really your resistance, 148.68. Is that what we said before, 148.68? It is. So 148.68 is going to be your number to the T. And if price is able to take that out, well, then let's go take a look at the A to B equals CD pattern that Steve-O's on here would go ahead and put on the chart. And that chart would say we'd start with this nice little high volume-ish low that was testing the prior high volume low, which was a hammer candle, meaning we're going to use as our A point February 19th. And our B point out here, my eyes like this one right here, like going, and there's several. It's a subjective thing. So be it. That would be the week of December, the 10th out there. A little retracement, a little 2-week retracement down on December 24th. And so it looks like Ubiquity Networks, John, if it can clear that resistance level, you've got that now. 158.12 would be where it would be targeted. Now, I'm not going to give you where it's headed to over 6 months out there. I'm not that good, quite frankly. But what we can say in A to B equals CD lore out here is that 158.12, which is the 1-to-1 A to B equals CD, looks like where price is headed to over time. It's going to do more than a 1-to-1 A to B equals CD pattern. Now, that's worth its weight in gold. That says that what Ubiquity Networks is doing over the long haul, and we're just going to interpret 6 months to kind of mean this sort of the long haul, looks like this is headed to 158.12. Then 176.08, maybe even 198, the 1 to 1.618 A to B equals CD pattern on the way to the upside. So, Johnny, that's what I see taking place. Next up is going to be 146.20. And then that 148.68 level before it provides you and I with any additional information. Peter wanted to take a look at Goldilocks inside the Tiger's Den. And Peter wrote in and says, Steve, what do you see in gold? Friday looked good, yet it failed at 12.89. What's next? So if you take a look at where it failed, Peter, kind of cool. We just take a look at a simple trend line that you and anybody else could have drawn. If we just use the low of February 7th, and the low of February 14th, what you're going to notice is that Friday's action stopped right there. Even though price was able to get above the top of a new profile that had formed last week at 12.96, still that is where price stopped. So the question is, what do we see in gold out here? Because it's basically at that point of control, either the retracement is done, which is a 12.91, or price is going to come back and revisit the bottom of that new profile at 12.86 out there. That's what I see when I take a look at the daily time frame chart. If we go over and look at gold price and all the currencies out here, we're seeing that it's pulling back in all major currencies as well. So there's no divergence there. But I don't see anything else at this stage other than that. With regard to Goldilocks, gold itself, as you know, formed that number 9 count at the low down here on Thursday. And so all looks good. Now, what gold really has to do, it really needs to overcome Stevie's green line at 1307. That's not what's in play today out here. As long as the bottom of that profile holds, maybe that next move is to the upside, which it seems to me like it would be. But hey, would be, could be, should be. Let's just see what happens out here until a level of support fails. And inside of gold, it's going to have to be the bottom of that daily profile out there. So I hope that helps you out with regard to what Stevie sees as far as what gold is doing out there. You know, speaking of that 9 count out there, we mentioned, or I mentioned, that the transports. So let's go take a look at the transports out here. And as we look at the transports as it was forming that 9 count. Now remember, that 9 count can form a bottom the day before, the day of, or the day after. This is clearly a day after. But a nice little hammer candle that formed there. What do you know? So where the transport's headed to when you look at this chart? Come on, you know out there. Those of you watching us on Tiger TV, you know where it's headed to. 10,430. Stevie's green line. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 150, S&P's up about 35 plus points out here. So let's go to our next question. Our next question comes from HD out there, Home Depot, and HD says, "Hey, Steve, I was wondering what your thoughts were about NOK as a long." And as we take a look at it, and I'm a subscriber to Master Republic. Well, thank you. Appreciate that, HD. So if we take a look at Nokia Corp out here, as far as taking a look at this from a long, so what we're trying to do is identify where was the bottoming pattern. Was there a bottoming pattern, reliable bottoming pattern that we can come up with out here? And the answer is yes and no. What we know, we certainly know where the bulls have defended the price for Nokia, and that was out here on February 9th. On February 9th, we had that nice big old bearish or bullish engulfing candle, bull sash candle, either one out here. And we had the same thing occur in this equity HD on Friday. So it was really right at those lows where it was testing. So from a bottom standpoint, we just know that price pulled back to support. Now, what Nokia is doing today is it's trying to close over Stevie's green line, which is about $6.15. We're at $6.17. So not really conclusive, but still a close above. And when the line is green, says you've got a rising price oscillator above zero, says, okay, not too bad. Now we'll come back over here where it's easier for me to actually draw on. And so the risk reward, to a certain extent, probably isn't there. But let me let you make that decision. And what I will do is help you navigate where price is likely headed to. So it's likely headed to the bottom of its box or the center of its box, which is above where price is trading at. And that's between 630 and 637 out there. As far as what the average true range is, the better trade, clearly, and it's easy to say now, when you can master the left side of the chart out there, it's so easy to tell you what happened. Question is, what is it going to do? Now, the average true range on this equity over the last 10 days is 12 pennies, so your stop has got to be 12 cents plus, probably 24 cents or so out there as your risk, somewhere right around there, 24 cents, and you've got about 20 cents upside action maybe. So probably not ideal for you, but if you're asking me, and we really won't know because there's this gap to the downside that also occurred inside of this. So it's your friend. We don't know if it gets overtaken. We just know that it's resistance. So resistance inside of Nokia at this stage here is between 630 and 640. Ideally, we would see some other type of bottoming pattern other than just pulling back to support out there, and we didn't get that. The weekly time frame chart says you've got resistance at 628. So even before the bottom of that daily profile out here. And so I'm going to say be patient when it comes to Nokia, or wait till do the math yourself. Use the, you've got the average true range. You take a look at the risk reward and see if that's something that you are interested in. The good news is you know where support is. And so therefore, if you see a close below Friday's low out there, then you know that the trade itself is likely not to work out and will head further lower. By further lower, I'd just be looking at the swing point from December 26 in the 542, 556 area. But you'd be out of it. You would have been stopped out should you have taken that trade. Tim writes in, so thanks for the question, and the subscribership. Tim writes in, says, we've had quite a run on the S&P, yes. Where might we see a bounce to the downside? Well, I don't know that the upside has completed out here. So I think there's more upside before there's more downside. Now, why would we say that? Good question. Well, one of the things we could do is we could just simply come over here and take a look at where we're at with regard to that Tom DeMark setup 9 count. And what we can see out here on a 30-minute time frame, let's get the cross here, was that bar number 8 took place at 12:30. So before we came on the air out there, well, I was eating some shrimp and a nice little salad out there. And then, but now, as we came on the air between 1 and 1:30, it's now 1:34, that 9 count has been taken out. Now, granted, this is bar 10. So remember, the high could form a bar 8, 9, or 10 out here. If this next bar continues to move higher, which it just ticked up again, but it's really more about a closing basis on a 30-minute time frame, and that I don't have the crystal ball for. But what this is suggesting to you and I is that price is going to continue to move higher. That's when I take a look at the ES 30-minute. Now, if we look at my more cluttered chart out here, we can see the A to B equals CD patterns. We can also see a new profile, which was bearish in structure on a 30-minute time frame that price closed over at 130. So not the ideal time to take a short position inside the S&P 500 because it's cleared resistance out there. It was bearish in structure, nothing more bullish than a failed bearish pattern. So the next level, the 1 to 1.618 A to B equals CD, isn't that much further. In fact, it's really no further than about where we're at right now in the 27.85 range out there. Is that going to stop price? I don't know. We would need to see some bears show up. Bears, meaning a bearish reversal candle. And then we need to see it close below Stevie's green line, which right now is about 27.77 out there. More likely than not, price is going to move up to about 27.96, Tim. And at 27.96 inside the ES Mini, where does that get us to in relationship to its new box? It gets us right there, 27.95.97. Now, it's not that. This is not where price can't stop, which is at the center of that profile out there, 27.86. It most certainly can. It's just we went to the shorter term time frame charts to look to see what kind of other patterns were out there, whether they were failing or not. And at this stage here, bearish patterns have failed. And it's really all about the NQ, I suppose, isn't it? If we take a look at that NASDAQ, strong like bull, and there ain't no bull about that, it's going to be in bar 9. It looks like this is headed to 72.12 out there in A to B equals CD, folklore language. So, yeah, it's been a nice run. The nice run was really established, you know, the market spoke. And the market's spoking. What that means is that you formed a nice little hammer candle on Friday. Now you got a bullish engulfing. We know that buyers are trying to, well, they show you where they're at out here. Now, Stevie's green line on a daily time frame is 27.99. So, you know, you've got the range of where price is most likely headed to. I'm not saying to short there, but it would be the area where you would want to at least consider it out there. So, Tim, thanks for writing in. I hope that helps you out. S&P inside the Tiger's Den wants to take a look at, which we will then, is Tesla, TSLA. So the question is, you know, what to do about Tesla out here. I don't know what the question is. He just says he's long. So if you're long and you're strong out here, what you really want to see Tesla do today is close above the level that it's flirting with. It's just a flirter, 286.55. Now, the reason why we suggest that it would be helpful to close above that is at least it would get back in the range of its profile. So you don't want to see it close back under 286.55. You'd like to see it at least close above that. If it closes above that, then you've got to move to 301.10, center line of the box. And by the way, the current box here is equally distributed, so no advantage, bullish or bearish out here. So your next stops should price close above the level that we gave you. You're looking at 301 to 315 out here. That's what Stevie sees when he takes a quick peek at TSLA. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 147, and let's go to our next question. We've got a couple here and one inside the Tiger's Den, I see. This comes in from Earl the Pearl. Earl says, hi, Steve. So hi, Earl. Do you still see a seasonal high in May? You know, that's a great question out here. So some of this depends on, there's two scenarios that I would anticipate. Let's go with the bullish scenario. Well, I don't know if bullish is the proper word. So here's what we know right now at 142. We know that the NQ has overtaken its daily bearish structured profile, 7162. So odds favor, as long as this holds up, stays above 7162 Earl. Odds favor the NQ is going to go test 7241. That's the top of its weekly profile. If price is able to move above that, then what I would say is that the market would be heading higher for 2 weeks. Not 2.5 weeks, not just 10 days, well, 10 trading days, I guess, 2 weeks from today or 2 weeks from tomorrow, give or take. That'd be my window out here. So if resistance fails, and I'm specifically going to look at the NQ out here right now because that's a strong dog. And so you're just talking about seasonal stuff out here. If the NQ does that, then my scenario would be that the market moves higher for the next 2 weeks into what would be the 22 weeks from today is what? 14 to 25th or 26th, right around there. And then I would say the market moves lower into May instead of that May high. Now, if the market pulls back into 2 weeks from today, then I would answer your question and say, yeah, then probably May, as the bounce would unfold, would be what you would be looking at out there. So, Earl, that's what you got to look at both sides of the trade. I don't know what price is going to do. I just simply know how to interpret the price action with the set of tools out here. And you know, the ES and the Russell 2000, if their daily profiles hold up, 27.95 and 15.59. In other words, price takes over those as well. That just sets the bar that we're headed to higher price. And then they, too, would head to the tops of their profiles weekly, 28.25 and 16.07 respectively. Then above that, that just solidifies the idea of running higher for the next 2 weeks out there. So that sort of lines up. Let me see. Well, that sort of lines up with the question in the den, which is from Mr. Z, says the S&P Cash Index now at the Fibonacci retracement of 0.618. So let's come on over here. Let's take a look at the S&P. He has stated that. and we believe him for sure. But what is it that he's looking at? Well, let me turn off a few things out here, just make it easier to see. Let's turn off that. Let's turn off this, those trend lines. Let's get those turned off. And from a Fibonacci standpoint, well, let me get rid of that too. Let's just draw the new one in here. So the new one, what he's referring to is, I believe, is the high from March the 4th down to the low of just a Friday out there. And you see the 0.618 retracement level that Stevie gets is 2780.74, and our high is 2780.18. I'm going to have to go with Mr. Z, and it's right there at that 0.618. Now, this is, in essence, a kind of a, so could price turn here? Yes. Am I seeing it on the short-term charts, even on the 30-minute chart? The answer is no. I don't see that just yet. Got to wait for every 30 minutes. We got another 15 minutes here before this bar ends. We're not looking at the 30-minute chart, by the way, out here. So, and you're trading into the swing point from March the 4th. Just kind of curious. If we just go look at the SPY, what is the volume? It's probably light, but you had volume out there of 106 million. You're at 32. So, yeah, it's light. But you know when you close inside a swing point Z, which would mean above 276.84, even if it's on light volume, you can go up to the highs out there. And the highs would be the 281.87. So the question is, am I seeing anything that I'm aware of that would suggest the rally fails here? Well, yeah, close above 276.80. That it fails. No, I'm not seeing the failure signals here yet, other than to know that we're inside a set of market profiles that we looked at in the ES where there is some resistance right about now, and for a few bucks more above this level out here. So what else would I be looking at? You know, the S&P 500 daily chart out here. Hey, below Stevie's green line says there's a retracement going on. But no reason for it not to head to 27.95 as we speak. So that's what I see, and that kind of bleeds into the two questions, I suppose, Earl's and Mr. Z out there. So, yeah, it's at the 0.618. Hey, the NDX 100 probably gives you, you know, another benchmark to look at. See how price is right at Stevie's green line. We're at 71.52. The NQ and NDX 100 continues to move higher. And we looked at Apple. There's not anything in the case of Apple that says that this is not going to be the outcome, because it's moving higher with volume. Took out a swing point with volume. Of course, I'm doing some mathematics to, you know, based on the volume as of 1:30 it was, to figure out what it might be at about 4 o'clock. So the NDX 100 would appear to want to head higher. It's trading into resistance. So right now, right here, right now, if the market were going to turn, I'd say because the NDX is what's powering the market higher, now would be the time. You know, that Dow Transports, we were looking at that. I think we looked at that. This says it wants to head to 10.429 out here at least. Stevie's green line. It's put in a solid bottoming pattern. If you like that, Tommy DeMark set up 9 count. Did it on Friday with a hammer candle out there. If we look at the semis, look for a failure out here. Nice move, 2.5%. What was it? Where are the semis? 2.7%. Upside move out here. No real now. Oh, that I take that back. So what the semis did here, we're looking at the SOX index. Z, you probably picked up on this, and so if we take it's formed a Gartley today. This is a Gartley buy pattern. What do we mean? Well, there was an A to B equals C. Let's just draw the Gartley pattern in here. Let's start from the low, wave number G, wave number 7 down there, and we move all the way up to the high. I don't have my crosshair on, so I can't tell you what the date is. We'll have to do that later. But I'll just draw in the pattern. So here's your Gartley buy pattern. Let's get that crosshair out there. Makes a, you know, probably a little over a 1-to-1 A to B equals, well, it was definitely over a 1-to-1 A to B equals C to, well, let's find out what it was. What was it? This will, oh, shoot. Well, pick up, there we go. What was it? About a 1.618 A to B equals CD to the downside. But this gap to the upside confirms this pattern out here. And looks to me like the semis are at least headed to 1366. So that's what I see. You know, semis are looking strong. NDX is looking strong. That's what it looks like as we speak at about 1:50 in the afternoon. Let's go to another question that came in here and make sure we get to all of them. Let's see, we're about to go to break. And this is, Steve, would you buy NVIDIA? This is JT from New York. or at what price would you go long NVDA? So I'm going to go ahead while we're about to go into breakout here. We're going to take a look at NVIDIA. I'll look at it on all my charts out there. That way we can give JT the best possible piece of information. But here's what we know right now before we go into break. NVIDIA, if it's going to fail, JT, it's right about now. Top of its daily box, 161.90. We're trading at the 161.39 out there. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we're taking a look at the NVIDIA for JT from NY. Hey, you got to like that. And the question is, where would you go long? So as we take a look at NVIDIA right now, having a strong move today. When I say strong move, I'm referring to, if we just look at the volume metric on it today, this is 154. You've got 14 million shares pushing into 16 million from back at February 25th. So moving into that swing point with volume. The swing point prior to that was the February 15th level. That was 37 million shares out there. So still we're at kind of resistance. Now we're at resistance of the top of the daily box, 161.90. And even if it can push through there, just a simple trend line from the high on January 25th, which hits February 15th, which hits February 25th, you know, you could get up into about the 167.90-ish type range out there, assuming that it doesn't break out. And even if it does, lots of resistance overhead. But you're asking, you know, where would you go long on this? Well, ideally, it'd be a light volume pullback to about 154. And maybe you're going to get that because resistance isn't too much further ahead out there. It's really all. Now, I understand why NVIDIA made a bottom back here being December 26th. You had that Tommy DeMark set up 9 count going on. You had a Stevie Rhodes momentum indicator signal. We have seen higher bottoms. We just really haven't seen, so to speak, higher highs out here. So, and the ultimate pullback would be about 129 and some change out there. So, JT, thanks for writing in. I hope that helps you out. Folks, stay tuned, please, because your favorite polar bear, he's the world's favorite polar bear. David White, he's up next. Tom O'Brien from 3 to 5. I won't sign off early. We've got, an extra 10 seconds here. But right now, if we're going to summarize it, watch on the ES Mini. 2786 to 2795. This is the area, which is where we're at right now, where sellers are lined up. Inside the NQ, watch 7162. In the Russell 2000, it's 1559. Those are your numbers to make a determination whether this is something more than a little counter trend rally. Have a great Monday, folks. Take care.